Good morning, traders. So here we are on Friday, December 8th, just a few minutes before the open. And we're going to take a look at this start to finish trade. This is the trade in DOCU. This is an earnings calendar trade. Go and take a look, if you would like, at the prior video on DOCU when I open this trade. And I get into kind of the logic behind doing this trade as a calendar trade, so you'll be able to take a look at that there. So DocuSign announced earnings last night, and they moved, as I had anticipated, down a little bit here to around the 46 range. Now, this is right now, since it's pre-market, I got this as a 15-minute chart. Let me put this back to a daily chart here for a minute so we can see my premise. My premise was that for the last 3 times DocuSign has reported, they have run up into earnings and they've sold off after the earnings announcement. They ran up into earnings, they sold off after the earnings announcement. Ran up, sold off. Ran up. So, premise here is that they're going to sell off. They had run all the way up to about 49. I was anticipating a sell-off possibly in the 45 or 46, maybe down to 42 range. It's looking right now, pre-market, like it might be in the around the 40, 45, 90, 46 range, somewhere in there. So if that does play out, if we do open there in a few minutes, ideally what will happen is the value of this will drop significantly. The value of our short strike, in this case, the one that is dated on the 8th, the value of that will drop significantly. And when it drops significantly, and this one is also going to drop, the further out is going to drop in value too. Now we're long these strikes. We are short these strikes. We are long these strikes. The difference between these two is what we had to pay to get into the position. Now, I did 8 of these, and that ended up being basically 180, which is the maximum risk in the trade. So what my hope here, my game plan is that this, currently we're pre-market, so this is not an accurate bid-ask spread. So, but basically we have 80 cents, and 8 of those, so $640. I'm hoping the vast majority of that should drop out of this fairly quickly after the open. Again, our long strikes will also lose value. Don't know how much value right now. These are apt to lose, but because they're further out in time, generally speaking, they're going to lose a little less in value. Options that are further out don't decay as quickly. So the whole play here is that we're looking to have a lot of theta decay come in the front dated options, which expire at the end of the day today. And they will expire quickly because they expire, or excuse me, they'll decay quickly because they expire at the end of the day today, and because the volatility event, in this case earnings were announced last night. Again, as we saw on the chart, right now it doesn't look like there's going to be a massive movement here, which is good for this position. Anything around that 45 is like almost perfect for this position. So if this thing were to, come down to around 45 or so, hang out there 45, 45 and a half for an hour or two, this position should become nicely profitable. So I have an order out there personally to close half of my position when it hits about double in value. So the credit, I paid a debit for this trade. If I get about double what I paid for the trade, I'm going to close half my position. Again, this should be a paper trade. I stress that going into this. Anytime I share a trade, it should be a paper trade. But that's how I would manage this in a live trade setting. So with that, I think I'm just going to pause here. We will wait until the open of our market here in a couple minutes. And then we're going to watch and kind of see how this reacts. But our market, while our bar is showing right here right now, because that's where we closed last night, In reality, it's going to be down around in here somewhere. So what we're going to see when the market opens is we are going to see this tent is going to shrink considerably. The entire tent is going to just shrink in on us. That's normal, and that's one of the challenges, if you will, of time spreads is unlike a condor or a butterfly where the tent structure does not change. In a calendar, that entire tent will shift on you throughout the life of the trade. And, your max loss really doesn't change in this, but everything else about this tent will change. So we'll see that here in a few minutes. I'm going to pause right now, and I'll be back as the market opens. All right, market, there we go. There's the opening bell. Now, it will take usually a minute or two for the pricing, for the market maker to get the position open, pricing to all get settled out here. You can see the numbers are all over. I don't know why my bell goes so wonky. Okay, so you can see right there, we're up about $148, $150 in this trade. And so in real life, in a trade, I'm taking half of this position off now. And so I can come in here and let me just, our price is still kind of bouncing all over there, but let me just come in and look at if I were to sell to close, this is our long. The nice thing is our long has not lost a huge amount of value. We can also see the bid-ask spread there is fairly wide. But so if I were to come in to sell to close this, that's halfway there, so that's probably about what I would get. So I'll go ahead and sell to close at that price, and then likewise here, I can buy these guys back. And so I'm going to buy to close, and I think I did the full amount. I think I closed them all out, which is fine. I'm perfectly fine closing this trade right here at this point. Yeah, something doesn't quite look right about that pricing. I think I may have had my cost basis entered incorrectly here, but let's see. Yeah, that was probably, because of the wide bid-ask spread, I actually would have shopped that a little bit more. But that represented a 40% overnight return. Again, in reality, I think I would have bettered that position because, again, if you look at that bid-ask spread, that's pretty wide right there. And I could have waited for this to decay more during the day as well, would be the next thing that I could potentially wait for, because as the day goes on, this is going to decay a lot more also. But regardless, quick, fast return on this one. And so that's kind of an overnight earnings calendar. And again, the reason I like earnings calendars is if this did not play out for some reason, if this went haywire on me and the market went way up or way down, I would have the ability to roll my short strike, which expires today, out 1 week in time and potentially pick up some additional income on that roll, which might help offset what had been my maximum risk in this trade of $180. So hopefully you found this of value. And please comment, like, subscribe if you would. And thank you so much, everyone.